Let's break down today's action with our market panel. Unlimited CEO Bob Elliott and Tracie McMillion of Wells Fargo Investment Institute. Great to have you both here. Bob, you're on set. I turn to you first because you say the bond market's signaling one thing and stocks are signaling another. What do you mean?
Well, I think if you take a step back, this move that we've seen over the course of the last couple of weeks is a rejection of the immediate recession fears in the stock market. We've bounced back to basically where we were. If you'd been out for the last 2 weeks, you probably wouldn't even notice anything in terms of how the stock market has moved. And that stock's basically at highs, largely consistent with a 100% probability of no recession ahead. Right? On the flip side, turn and look at the bond market, particularly the short rate pricing, and what you see is 7 cuts priced in over the course of the next year. That type of cutting, that pace of cutting, is the sort of cuts that would happen deep in a recessionary environment. So essentially, the short rate market is pricing in 100% probability of a recession. Stocks pricing in a 0% probability of recession. Probably both are a little overstated on either end, and that could be challenging for either on a forward-looking basis.
I was actually just going to go there with you, and that is which one's right, especially when we know when the bond market is big and mighty and tends to be the leading indicator most of the time.
Well, the bond participants have been the smart money for maybe a few decades, but they haven't been the smart money over the last couple of years.
Okay.
And I think we may be seeing that play out again here, where growth data that's come in has been pretty good over the course of the week, and so maybe it's the bond bulls that have overstated the weakness in the economy.
Tracie, how do you see this market right now, especially as you do have this data this week that has supported the soft landing narrative? You've had strong or at least solid earnings so far, and we've had some dovish Fed speak ahead of Jackson Hole next week.
Yes, that's right, Morgan. The data so far this week have pointed to an economy that is slowing enough really to tame inflation, but it is also indicating that it's unlikely we're going to fall into a recession here. We saw producer prices fall. That should help margins. We saw a consumer that's continuing to spend. That should help the top line. So we see double-digit returns for equities through the end of 2025. So, we say that any opportunities presented by volatility, like what we saw last week, is an opportunity to move maybe some fixed income into equities.
Okay, so what specifically would you be buying?
So specifically, we are overweight large caps. We've been overweight U.S. large caps now for the better part of 2 years. What has changed, though, is we've taken some of our dry powder and we have increased our allocation to small caps. We have moved that from an underweight position, where it's been for the better part of the last 2 years, to a neutral position. We do think that as the Fed lowers interest rates, as we go through a soft patch here, probably a growth recovery in 2025, that sets the stage for better performance by small caps than we've seen over the past few years.
Okay. Bob, what do you like here? And I ask that knowing that you look across assets, including gold, which continues to rip higher.
Yeah, well, I think gold is a very interesting story, totally underrepresented in the vast majority of investors' portfolios. And it pushing highs is a reminder that one of the best assets, most diversifying assets you can have in your portfolio is gold, relative in particular to bonds here, where, I think gold might be sniffing out some of the tail risks that are still present there. And so that's why you're seeing the bid in a way that, bonds are probably overpricing that dynamic. And so if you have the ability to rotate your positioning, moving a bit away from bonds where they are currently priced with all those cuts priced in, to gold, which still, while it's making new highs, could still easily have considerably more room to run, given how underrepresented it is in most portfolios.
Tracie, how much does Powell at Jackson Hole matter next week? Not to mention the fact that we get minutes. We also have a DNC. We have a few things next week. But in general, the Fed speak, how much does that matter here?
So certainly markets are watching everything that the Federal Reserve is saying, especially what Chairman Powell is saying. So Jackson Hole will be important, but we think that he's probably just going to reiterate that they are still on track to keep inflation moving towards their target. They're still on track to cut rates in September. Probably won't give us any magnitude there, but just reaffirming their message that everything is moving along as planned. Certainly we get the minutes that could give us a preview of what he is going to say in Jackson Hole later in the week. But overall, we think that what the markets are going to be most focused on is the labor data and inflation data.